Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast, where we're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And if you've ever wanted to know what it was like to go from pilot to real estate magnate, then guess what? Today's the conversation that you're going to want to listen to until the very last word. I promise, because you've already got a little bit of a chuckle, and you'll know why in just a second. Because you know what? Today's guest has nearly 2 decades of leadership in operations as well as capital markets experience. He previously led a Bay Area real estate investment firm in raising over more than $200 million in capital for projects. And prior to that, he piloted for both the U.S. Air Force as well as the Navy. He's a husband and a father who enjoys flying as well as sailing. He's the COO of Mag Capital Partners. It gives me great pleasure to welcome to today's conversation, Mr. Neil Wahlgren. Neil, welcome to the program.
Thanks so much for having me, Billy.
Hey, man, this is a lot of fun. I heard you chuckle there. In the opening.
I like the energy, man.
All right, cool. All right, we love this. Everybody here is ready for you to share so many knowledge bombs, and we're going to just have a lot of fun as well. So listen, Neil, and as you know, I like to ask everybody here the same kind of 5 questions, and somewhere in between, we're going to get to know you a whole lot more about your experience and what is it exactly that you're doing over at MAG as a COO. And but before then, we have to really get a chance to understand some really important things about you. And number one is, where do you live in the United States?
I am located out in San Francisco, California, in the North Beach neighborhood, a little Italian district there, overlooking the bay and the Golden Gates. I love it out there.
Awesome, man. All right, fantastic. So up in the Bay Area on the left coast of the United States, I like to call the West Coast. So perfect. So I'd love to start out with a little bit of positivity or some more positivity as well. So what's the most positive thing that's happened to you in the last 24 hours, Neil?
I got a surprise visit from a buddy of mine named Scotty, who I used to surf with and live with down in Southern California years ago. And he just called me and told me he was on a cross-country road trip on his motorcycle, and we were able to line up, and he showed up, and we just had a great time, dinner, catching up, and it was just a really unexpected blast from the past there.
Oh man, how cool is that? I love being able to get together with friends. Well, it doesn't happen that often. And of course, many of us have been locked in for quite a while. So anytime we can get connection with friends, and especially friends that we've had for a long time, it's always a really awesome thing. So appreciate you sharing that. Listen, Neil, I always do my best, like in the first couple seconds, to give a high level overview so that the entire Going Long family can get a chance to get to know more about you, intrigued by your story and things like that. But it's almost impossible to tell your story in the way that you would tell your story. So would really appreciate it if you would share with the entire Going Long family your backstory. And if you could also really, as you're telling the story, if you could just think about, like, what are some of the major decision points that you've made to get to this point in your journey, maybe some of the challenges that you've had along the way as well. And then from there, you and I are going to have a nice conversation. We'll talk about what you're doing today, talk about the future a little bit before we get into the Going Long Final 3. So floor is yours.
I love it. Big decisions. Well, so I grew up in the Bay, outside of San Francisco, kind of in the suburbs out there. And for most of my life, I was like super excited to be a doctor. And I was going to go in the medical profession. And, I thought maybe I'd be a surgeon, and had a chance to actually kind of follow a surgeon for the day. And got to see a little blood, and quickly realized that that whole field was, really just not my calling. And so that was probably one of the early, kind of early life decision points. And it was kind of back to the drawing board. What do I want to do? And and just kind of thought about what I like to watch, who my influences were, and really just kind of stumbled across, hey, flying sound like it might be all right. And so I was, kind of rare in that I wasn't a little boy, wanting to fly, really kind of came into that, passion a little later in life, compared to a lot of other folks who end up being pilots, but end up looking civilian route or military. And, I was grew up in a sort of boring neighborhood and in suburbia, and just the whole military flying thing sounded a little fun. So ended up going to the Air Force Academy for my undergrad. And this was in 2000, so a year before 9/11. And I remember, people are like, yeah, there's not much going on. You'll finish, you'll probably fly, do some training, this and that. And then when 9/11 happened, suddenly, the entire, kind of a landscape of what things would look like afterwards changed pretty significantly. So, but it was good. It really kind of gave some purpose behind this path that I had chosen there. So I ended up going, getting selected to go the C-130 Hercules track, which is, for those of you who don't know, kind of a big, squatty, ugly cargo plane. We call it tactical airlift, where, you're able to land on dirt field runways. You fly with night vision goggles. There's a lot of airdrop, and ended up flying really all over the world with it. Everything from crushed shell runways on islands off of Guam to, combat deployments to Iraq and Afghanistan. And, just a incredible chance to see the world and do, what I felt was pretty meaningful stuff during that chapter.
Wow, man, that's pretty amazing. And so after that, I mean, you're flying. This is after 2000, after 2001, life kind of changes. And then how do you go from there to raising over $200 million for capital projects of
Sure.
capital for projects? Like, how does that happen?
No, it's a great question. So, after, I'd done some time, and, after a while, you start feeling like, maybe things that were challenging and new at one point in your kind of career, you start seeing repetition, you start seeing consistency. And for me, I kind of hit that. I just spent 4 years living in Japan, in Tokyo, flying all over Asia, the South Pacific, Europe and the Middle East there. And, ended up getting stationed in Arkansas. And it was a bit of a culture shift, to say the least. And, it was one of those moments where you kind of reevaluate, and ultimately had the opportunity to shift out of active duty into the reserves. So I switched over to the Navy, moved to California. I wanted to ultimately get back a little closer to family, and was still flying part-time, but got a chance to say, what do I want to do with my life at this point? And, looked at a lot of stuff, and someone along that path had recommended, the old purple Bible, Rich Dad, Poor Dad. And I remember reading it, and I remember literally filling out airline applications and having this book on my desk. And suddenly it just kind of like a light bulb went off and said, oh my gosh, I'm pursuing a path of what I'm trying to get out of. Right. And this idea that, sure, commercial flying is great, but, your income and your wealth and your achievements are directly tied to your time. And this was, ultimately a, kind of a cycle of connection that I was looking to break and to kind of rework. And, I'm like, I need to find a way to ultimately, really be able to create this lifestyle I'm looking for without requiring me to be in a cockpit far from home for it to happen. And, don't get me wrong, I love traveling, but I like doing it on my own terms, not as a career, if that makes sense. So that was, kind of the spark that went off. And I had an opportunity actually at a friend's birthday party to kind of connect with the husband of a family friend. And he had started this business in the Bay Area. He had ran it for some time, getting, near the end of his career. And ultimately said, hey, I'm looking for someone to, help me run this, and ultimately, potentially, take a leadership role there. So kind of a atypical way to fall into real estate. And he asked me, hey, like, what do you know about real estate? I'm like, well, not a lot, but I'm good with numbers. And he's like, all right, I'll teach you. And really, it's not rocket science, right? You have money coming in, you have expenses, and it's something where if you model it correctly, it's actually a very, kind of consistent and predictable way to, create cash flow and wealth overall.
Yeah, definitely one of those ways where you can create consistent cash flow and wealth over time, right? And I guess it's interesting because you had this epiphany when you went and followed a doctor surgeon, right? And you were like, I thought I wanted to do this, don't want to do this. And so then you didn't have this plan to actually get in as a pilot, but you became a pilot. And then you're filling out these paperwork and you're realizing like, I don't want to have my time and money like connected. And so then you're thinking about the little purple book, and then you meet a person at a I don't know, get together or whatever, and then eventually build a relationship, and you then get into another area where you never really thought. And then as part of that, you once, and I come back to the same question, right? You're raising over $200 million for different projects. And so some people may think, well, how in the world does that even happen, man? Right? Like, I'm just curious, because this goes back to one of the basic premises here is kind of the mindset that allows you to have this freedom to move in a certain direction without having a you can only, because sometimes, and it's probably going to be difficult to ask this question, but hopefully you're following me. Like you had the wherewithal to like know kind of where you wanted to go, but you didn't know where you wanted to go. And at the same time, you just allowed the different opportunities in life to continue to move you forward to the point where now you're crystal clear on what it is that you want. And maybe because I know a lot of people are stuck with that. Either they have to do this path, and if they don't have that path, then they're kind of scared that life is not going to work out. Maybe you could talk a little bit to that, because I think it's something that will be very empowering for a lot of people.
Yeah. Let me make a comparison, and I'll compare it to, kind of a strategy of how I like to travel. And traveling is one of my passions. I got to do it a lot in the military, and I still do it, quite often. And, I love being able to kind of bridge work and travel as well. But when I travel, I like to, I'll have a little bit of structure, typically, the first kind of night or so, but then I'll set up these sort of general blocks of how I think, a trip might go. And I'm very careful to leave room for spontaneity, for chance and opportunity. And every single time I go into a trip, I meet people, I talk to people, and the trip ends up really rolling out in a way that's different and honestly better and more fulfilling than I ever could have planned, from my seat from the get-go. And this idea that you have to allow spontaneity and really luck to impact you. And the only way you do that is by giving yourself the, awareness to say, hey, just because I'm doing this right now and just because this makes sense today doesn't mean that, my life will take a shift that is, for the better, and just kind of leaving yourself open for that, shift to occur when it does.
And so I love the way that you explain that, right? Because you're using a traveling analogy. And so when you are traveling, you're looking to have new, something you're traveling for a reason, right? And so whether that's for leisure or whether that's for business, you're looking for some type of an outcome, some type of an experience. And so when you talk about like chance or creating, I would say creating new opportunities, because luck, you create your own luck, right? Because you allow yourself to be open for that. I think it's a great way to help people with the mindset. Like you don't just have to get to this point from this point. Like if you allow yourself to live and allow some other opportunities to come into play, then things can be very, very different. I'll just share my story, right? I was on a 1-year sabbatical 20 years ago, right? It was a 1-year sabbatical. I was in Paris. And since then I've lived in Paris. I lived in the south of France. I lived in Italy, and I've lived in Spain for the last 15 years. So I always tell people, be careful with those 1-year sabbaticals. You never know how they're going to end up. So this is really, really helpful, right? And as we get a chance to know more about you, Neil, and one of the things that I would also love for you to start to help us to understand, right? Because we're going to get into this whole long distance thing, and you can live anywhere and invest in a number of different places. But before we do that, like, tell us a little bit about Mag Capital Partners and kind of where I know what your sweet spot is, but help the Going Long family understand what the sweet spot is.
Yeah, absolutely. So this prior firm we mentioned, we had a model where we would partner with operators and developers who, were growing and ultimately growing at a rate typically that exceeded their ability to organically raise capital. And so we would effectively be the investor equity arm for real estate investments.
Could you sorry, I know what you mean by that, but could you give an example for the Going Long family? Like how would that play out practically?
Yeah, absolutely. So, ultimately we would do, maybe 5 or 6 projects a year with different experts in particular fields. So for example, we would do a project with, for example, one syndication group that specialized only in like 1990s build Class B value add multifamily apartments in Northeast Georgia, like this razor sharp focus. And we were able to basically leverage that expertise with our, kind of local investment group in the Bay Area and say, hey, here's someone who really knows their product and their asset, and, basically pair and, really handhold, show the opportunity, and co-invest with them in this project to place the equity. And then, the next project might be an operator that does, multi-tenant retail in Dallas, Fort Worth, and another one, and so on and so forth. So one of those operators was Mag Capital. And, I had a chance to work with the principals and to see their model, especially in a comparative level. Hey, this single tenant net lease industrial investment. I mean, that is their bread and butter at Mag Capital. And I loved it, and ultimately had the chance to join, full-time with the team a little over 2 years ago. So what Mag Capital specializes in is single tenant net leased industrial. And these are investments that are large industrial warehouse space that is housing manufacturing that's happening typically in the Midwest. So we have investors all over the country, probably main concentrations in Texas and California, but we're able to effectively say, hey, here's an opportunity, like you mentioned before, not in your backyard, but we're able to really lay out the fundamentals, the creditworthiness of this manufacturing tenant. Typically, they've been in business, 30, 40, 50 years, long credit histories, and we're able to set up these investments. And this is the sweet spot of this type, is with an absolute triple net lease. And what this means is, as an ownership group, we are effectively transitioning the responsibility of property, of property maintenance, of utilities, of maintenance and upkeep. I mean, even like roof replacements, new pavement, HVAC, et cetera. We take all those expenses and we remove it from us as an investment group and place those with the tenant as their responsibility per the covenants of the lease.
Fantastic. So triple net, and we're gonna get into that a bit more. But because you kind of gave us the opportunity, of course, well, this is the Going Long podcast, right? And so this is all about being able to feel comfortable and confident investing beyond your backyard. And so you talked about it earlier. So before I come back to actually specifically where your niche is, which I think is fantastic. And once again, Going Long family, this is one of the really important things, is, as Neil's talking about, is to recognize the more that you can niche down or niche down, however you want to say it, right? I've been in Europe for a while.
I like niche.
Okay, all right. This is one of the things where you can actually find the strongest relationships in the people that are most likely to want to align with you, right? The closer you can niche down. So, but you mentioned it, California, Texas, but you all are focused in the Midwest. And so even when I read Rich Dad, Poor Dad, right? And I've got it over here over my shoulder, and I've got a bunch of the Rich Dad series books and stuff like that. And I've read a bunch of other real estate books after that. A lot of them focused on residential and multifamily and all this kind of stuff. But we're always told when we get started, like, hey, you buy in your backyard, you got to be able to see the property, and you got to be able to go over and drive to the property and da-da-da. And I'm thinking, well, I'm in a multiple 6-figure job and I like what I do, and I just got tired of the stock market. And so this whole thing about being able to invest long distance is creating opportunities, right? But it goes against what 95% of the people are thinking or told. So why in the world would you build a business around helping people invest potentially long distance?
Yeah, no, it's a great question. And it boils down to, what are you trying to do, right? Are you trying to feel safe? Are you trying to feel comfortable in control? Or are you, ultimately looking to put your money in the most optimal investment? And just to use an example in California, right? California, there's the potential for appreciation, sometimes significant, sometimes not. It depends on a lot of massively variable things that honestly are out of most of our control. Right? But from a cash flow level, if you're looking to buy real estate that actually creates cash flow and creates income, almost non-existent. And so, and that was the first driver that, for me, I said, hey, appreciation's nice, but cash flow is something you can focus as your priority. And that's what we've done. And by starting with that as your cornerstone and ultimately building your investment criteria and location and asset type around that focus, ultimately that's what drove us to that, industrial Midwest niche.
Okay. Either way, man, niche, potato, it's all good.
You got me thinking about it.
There you go. No, but Neil, this is because at the end of the day, and this is one of the things that we talk about a lot here, and I just repeat it all the time, is, to your point, depending, what is it that you're actually trying to do? What benefit is it that you're looking at a personal level, right? Are you looking to create cash flow? Do you need some type of tax benefits? Do you need some type of equity buildup over time? Do you need appreciation that you can actually force, or do you just kind of hope that it happens, or whatever? These things that you and I know. But once you're clear on that, then afterwards go to the location, the Midwest, that's going to probably give you, in your specific case and the people that you're serving, to give you the highest probability of achieving that goal. And then once you're there, you build the team, and the team that understands the location and understands what you're trying to achieve. And then whether it's industrial park A, B, C, or D, in your case, it doesn't really matter because everything is aligned. Right.
Exactly.
At the end of the day, that is what this is all about. And you once again are saying the exact same thing. So going along family, it's not a secret sauce. It's just, how do you actually figure out how to do it? So from there, and I appreciate you sharing why long distance once again, because I want to make sure that the whole world knows that everybody can be doing this, right? Let's come back to where you're focused, and there may be some of the things that you mentioned already, Neil, that maybe some of the going along family is not really familiar with. So you talked about this specific type of tenant that is in these industrial parks. So maybe if you could give us a little bit more of the profile once again, and then maybe if there's I don't know if there's a name of a type of tenant that people would go, oh, okay, now I get exactly the type of customer or client that he's talking about.
Yeah, no, absolutely. We find for us the most value, and really, what is value, right? When I talk about value, I talk about the spread of real and perceived risk. And so the space we play in is what we call private credit tenants. So these are not going to be, companies like, Home Depot or Walmart or McDonald's, or really probably most publicly traded name brand companies, because those have a very understood low level of risk, but a correspondingly low level of cash flow and returns. And ultimately you trade one for the other, right? So we play in a space of what we call private credit tenants, where they don't have, a Moody's or an S&P giving them a credit agency rating. And we actually have a full credit advisory team in-house. So every project we look at, the main risk is tied around the creditworthiness of the tenant. So we actually do a full analysis, what we call a credit memo, and really break down everything from balance sheets to financial projections, leadership teams, customer profile breakups, and debt loads. And it's almost this interesting hybrid of private equity and real estate that come together, where the quality of your tenant becomes far more important in a single tenant manufacturing investment than, say, a multi-tenant apartment complex, where you're spreading that risk over 100 or 300 or more renters that if you lose one or two, it's okay.
Yeah, and so I guess when I'm hearing you say that, so it's not like the largest. So we're talking this through so that our
Sure.
listener understands it. So it's not the largest of the large, the public companies that, they're and because of that, a lot of that information and data that those public companies have, it's readily available. So I guess it's a bit easier, but as you talked about before, the real and the perceived risk. So because a lot of that information is there, then the typical return on that type of a property is probably going to be less because there's not as much work that needs to be done. But because you're working with a private credit tenant, then you on the back end from an underwriting due diligence perspective, you're doing more work to find the information, the data, being able to pull that together. But as a result, because this information or data maybe not readily available, there is a larger, a wider spread or a premium on that type of due diligence that's done. But at the end of the day, because you are finding the right type of private credit tenant, it can create a potentially better return for the investors that want to work with that type of scenario and that type of tenant. Would that be accurate?
Yeah, no, that was an excellent kind of summary there. And to answer your other question, what type of companies are they? I mean, just to use some recent examples, we have a lot of auto parts manufacturers. We have aerospace manufacturers. We bought a piece of real estate in Iowa last year that makes these giant industrial mixers and dryers. Imagine like a 15-foot tall KitchenAid, mixing everything from cereals to dry powder, paint, primers. I mean, just really a lot of the underlying pieces that end up with end products consumers are more familiar with, but a lot of these B2B suppliers that honestly most people never see or encounter in their daily life unless they're in that particular industry.
So that's really cool. So would you say that it would be that a number of the clients that you serve, like your investors, are these people that are typically not just looking for a better return, but they're also interested in kind of understanding what the specific process is and like how these, because they're typically, I always think some of the best investments ever are the most boring, like the things that you just never ever think about. But that person who is interested in the process and understanding like, okay, I can actually understand this. I see this. It makes sense. So this is something that I want to be involved in.
Yeah, no, I think, our investors, they really, so the way we structure these is, largely our investors take a passive role in the investment. So we at Mag Capital, we take the management and we are effectively steering this ship. Typically about 4 or 5, 6 years is kind of our typical hold time there. So our investors are coming on at a passive level, and they will usually kind of spread capital across, several projects a year. But they love the story around the tenants, and it's fascinating, and really getting to not only say, hey, here's the financials, right? Clearly that's like a very important part. But then, telling the story of what this business has done, how they got to where they are, the changes they're making, and really how they are growing and planning to grow in the future. It's fascinating. It's a fun story. You get to see industries that you're not related to or maybe exposed to typically. And it just, I don't know. I think a lot of people find it personally satisfying to kind of learn about these industries as they follow their investment journey.
Well, yeah, and I found the very similar thing, right? When you're doing, and I'm a big fan of real estate, of course, and just like the residential stuff. But at the end of the day, though, these are very similar stories. So like when you start talking about things like, and I've been talking recently about carbon capture, and this is how this plays into, the Paris Agreement and how this supports a specific process. And it's really interesting when you find out people are like, oh wow, this is really cool. Like I want to understand more about this story, this group of people, why they're doing that, and things like that. And the way that you're explaining it, it rings a bell to the type of person that typically is going to want to, work with you, get to know more about you, and eventually invest in the types of projects that you are that you're generally managing, which I think is fantastic. There are a couple of things that I do want you, because I know you're an expert in this area, and I'm going to kind of take advantage because the Going Long family wants to know. But you focus on things like the sale leaseback. You already talked about the net lease, but kind of talk to us about what that means when you talk about the sale leaseback, because I think most people are probably not familiar with that and how that could be something very interesting for an investor.
Yeah, absolutely. So in the single tenant world, there's two main mechanisms for how to buy industrial real estate. One is a stabilized deal where you have, a building, you have a manufacturer inside. There's a lease, really lease relationship between the building owner and that tenant. And you as an investor are buying that real estate with that lease in place. And that what happens in a sale leaseback is slightly different. A sale leaseback, you're coming in and that building owner is the manufacturer inside. So that we call them an owner occupant. And what they are doing is they are recapitalizing their financial picture by selling the real estate, effectively removing their investment in that building. They sell it to us, and then simultaneously they sign a long-term lease, so a 15, 20-year net lease, and they become a tenant or a renter. And they are using the proceeds from that sale that were tied up in the building, and they are reinvesting that into more needed or profitable segments of their business.
And are they doing that with the goal of eventually, because of the delta there, then eventually that will be something that they reclaim the asset? Would that be accurate?
Typically not, actually. Okay. Yeah, okay. Typically long term. And here's the way you have to view it from a tenant's perspective is, from a manufacturing firm, do they say, hey, do I make a better ROI making aerospace parts, or do I make a better ROI owning real estate? And for them, typically the gamble is, hey, aerospace parts are our specialty. We think we can make a better return doing that than owning real estate. And we're okay basically shifting capital to that, which is great because that opens up opportunity for groups like ours where we say, hey, our focus is real estate. This is what we like to own. And, really it's a more balancing of capital in a way that makes sense for both parties.
Perfect. And this is where when you're in your lane and you're doing what you're best at, then you're getting the highest and best return on your time and your expertise.
Exactly.
Which makes
100%.
sense. Which makes sense at the end of the day. So I'm just curious, but before we get into going long final three, so we've kind of talked about a little bit of the persona of the person that you're typically working with or the person that's typically seeking you out, but maybe tell us a little bit more about that person and kind of where do you see things going with Mag Capital Partners over the next, I always like to say 12 months. Because beyond that, well, most people don't even dare going beyond that. But a little bit more about the persona and also too some of the things that are going to be happening over the 12 months.
Yeah, no, very similar to your listener base. They're typically a mix of high net worth individuals, some family office, and honestly a lot of just successful individuals. People that have their executive job, they're surgeons, they're lawyers, they're doctors. People that their highest return on capital for them is that specialty, that passion, hopefully anyways, and something that they know they can apply themselves probably most effectively by doing that. And they make money and they grow wealth, and then they're able to effectively deploy wealth without deploying their time. With us, we're good shepherds of that capital. We grow it, it produces income, truly passive income, and that's what they're looking for.
Awesome. Okay. That makes it makes a lot of sense. And that's the person. So, and also just give us a little bit of a vision. Like we say, okay, well, kind of how many more people are you impacting? Are you serving? If we look between now and the next 12 months, what does that look like?
Yeah. I mean, we've been fortunate, we effectively have zero marketing, and I like it that way. We've grown kind of as this intimate family of people that, aren't just one and done, who like to continue to reinvest with us to grow over time. Most of our growth is literally through referrals, through friends, families, brothers, fathers, sons, sisters, aunts, grandmothers. And that's the organic growth that we've created. And I don't know, it feels like a family that way, and I like it. So, what does the next year hold? Probably, just continuing to, grow, to have the ability to take on maybe more ambitious projects that either are larger in size or require a quicker close. And as we grow this really an investment team, we're able to be, more ambitious and take on, really better opportunities over time there.
Fantastic, man. That sounds great. And also to being able to work in that organic way and being able to continue to work with people who already know through a referral network is something that's phenomenal as well. So appreciate you sharing that. And you know what, Neil, the thing is, I want to keep talking to you forever, man. And I know I can't keep talking to you forever later, but the thing is, we got to get into the going long final three. And the thing is, I never ask anybody the going long final three unless you tell me that you're ready. So my question is, are you ready?
I'm ready.
I knew you would be, man. I knew you would be. So here we go. So listen, we started with you on the left coast of the U.S. in the beginning, and I'd like to bring it back to this side of the pond. So I would love for you to share with me and the Going Long family, what is your favorite European city, either that you've already visited or still on your bucket list to visit?
Oh, man. So I've been to a lot of Europe, probably 20 countries in Europe.
Awesome.
I visited over 100 countries overall worldwide in my travels and hope to just keep that going. So my wife is German from Munich. So I'm clearly very partial to Bavaria down there in southern Germany. But don't tell her this, but I really love Budapest. I think it might be my absolute top out there in Europe. I just think it's just a fabulous city. I mean, the food, the people, everything from the ruin bars to the hot tub, the soaking pools, and the food. And it's such an interesting city for me whenever I go out there.
No, yeah, Budapest is rocks. Yeah, definitely. I'm a fan as well. So awesome. So another vote for Budapest. Here's the other thing. Like, the thing is, Neil, like, you, like many successful people, because you're a successful person. The thing is, what I've noticed is that successful people, like, one of the reasons that they're really successful, Neil, is because typically they've only made one mistake in their entire trajectory, which is why they continue to be Hang on a second. Why do I always get that wrong? I think I get that wrong. Maybe it's by design. I don't know. Who knows? Anyway, so the Going Long family gets the joke. So anyway, but no, here's the thing. So Neil, you're a successful person, right? And one of the things that I do notice really about successful people is everyone who's successful makes mistakes, like lots of mistakes, and probably more mistakes than most people. Call them mistakes, call them learning opportunities, call them whatever you want. But the thing is, what really successful people do differently is that they take a lesson away from every single mistake and apply it somewhere else. And so as we're continuing to learn from you, what is the one lesson that you've learned in the past from a mistake that you would like to pay forward to the Going Long family?
Without a doubt, it's be willing to pivot. And listen to the world. And I don't mean that in like some hippy dippy way, but listen to, the people you hold close, and allow yourself, kind of what we talked about before, allow yourself to be open to opportunities that maybe are not on this path that you've built for yourself, and be willing to say, hey, you know what? Like, maybe what I'm designed to do or what makes me most happy is something way different than what I'm doing today, and just be open to it and, try it, take risk, right? And if you don't take risk, you can never really, find great opportunity, and be willing to kind of get out of your comfort zone, jump in with 2 feet, and, not to use overused, little tribes there, but, really be willing to just fully leave your comfort zone and try something new when the opportunity is there.
Yeah, love that. And so when the opportunity is there, be ready to pivot, as you say, be willing to look and explore new opportunities, and also take action. So I love that. Love that. We'll include that as well. And I guess this comes to the last question, man. So the one thing we always love to leave people with is up here, want to be able to help fill that brain with more knowledge. And so what is the one book that you would recommend to the Going Long family?
I am reading a book right now called Why We Sleep by Matthew Walker. And I find it fascinating. I mean, we spend so much of our life literally with our eyes shut, and this idea that so many people don't even think about what is happening while we sleep. And the book's really fascinating, both from a science perspective and how to improve it, and really why it's so important in effectively understanding your sleep so that you can be more productive and more awake and optimize the time when you're awake. And I've really enjoyed it so far.
Fantastic. Why We Sleep. Okay, we'll have to add that one to the list, and it will definitely be in the show notes. So don't worry if you're on the treadmill, if you're cooking dinner, if you're doing something, driving the car. Don't worry. We'll include it in the show notes. We're taking care of you here, everybody. So Wow. You know what, Neil? I'm just thinking about the story, and I'm thinking about from the very beginning, and you being able to realize what you didn't want to do, and you kind of were willing to pivot, as you just talked about. And as you pivot, you got into some new areas, and you started flying. And then afterwards, 2001 showed up, and that kind of changed the whole trajectory of the life. And you were in Japan and were doing some Asia Pacific, and then you realized along the way that you didn't want your time to be tied to your income, which I think is phenomenal. And I'm sure that a lot of people can relate to that here. And then through relationships and being willing to pivot, you made relationships with people that then brought you into this new world of real estate. And although you didn't know much about it or anything about it, you were willing to learn and were surrounded by the right people. And you continued to take action. You continued to pivot. From there, you then niched down into an area where you today, after having already raised previously $200 million in another company, you take that expertise somewhere where you actually built that relationship from the previous relationship. And now as a COO, you're very clear in terms of what you want to continue to do at MAG in terms of being able to work with the private credit tenants and be able to add value to your investors. And I think because of that, I don't think, I actually know because of that in your story that there's so many people from the Going Long family are thinking, this Neil dude is awesome. I got to find out more about what they're doing over at MAG Capital Partners. I want to be able to get in touch with them. I want to find out more. I want to have another conversation. This guy's been to over 100 countries. Wow, this is awesome. So help us understand, Neil, what is the best way for the Going Long family to get in touch with you to find out more about yourself and more about what you're doing at MAG Capital Partners, please?
Yeah, probably just shoot me an email. I'm really responsive, and I love to hear, what people, gathered from the podcast, or follow up with any questions, or, if you want to talk about joining our investment family, happy on that side too. But my email is Neil, Neil, like the astronaut, at magcp for magcapitalpartners.com.
All right, Neil at magcp.com, right? Okay, perfect. And once again, don't stop what you're doing. Just don't worry. Just go to the show notes and you can just click the link and you'll be able to get directly to Neil. And I think that's phenomenal. So listen, Neil, man, the conversations go by so fast. This has been, once again, massive value. And I really want to just thank you from the bottom of my heart for investing your time with me and the entire Going Long family. Thank you very much.
Likewise. And thanks for having me on, Billy.
Yeah, sure. My pleasure. And Neil, if you just give me a couple seconds, I just want to say a couple things to the Going Long family before we wrap things up. And wow, Going Long family, this was another amazing conversation. Like Neil just left so much value, gave you specific examples, helped make things concretely clear, and he's even giving you an opportunity to reach out and learn more directly from him. So, you can be the person that actually makes a positive impact on someone else's life. Share today's episode with at least 2 to 3 of your friends. Someone needs to hear it, and you can be that person that is the positive reference in their life. And then, from that, they're going to learn so much. And at the same time, it's going to give you another opportunity to leave an honest review. Like, tell us what you thought about today's conversation. Let us know what you liked. As Neil just said, the things that you want to know more about, like leave it in the review. An honest review doesn't need to be 5-star. If it is, then we'll take that as well. But just leave an honest review. We'll continue to use that to make the podcast even better, bring you more value. And it's something that I take very, very personally. And aside from that, I just want to tell you that I'm really looking forward to welcoming you back on the very next conversation and episode. Until then, go out and make it a great day, and thank you very much.
Wow, don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.